Most people who enter the stock market ask one powerful question. Should I do day trading or swing trading to make more money? Social media is full of screenshots showing traders making thousands of dollars in a single day, while others quietly claim they make consistent profits by holding trades for a few days or weeks. But here's the truth most gurus won't tell you. It's not about which style makes more money on paper. It's about which style you can actually survive long enough to master. Because in real life, the trading style that fits your psychology, time, and discipline will always outperform the one that just looks exciting on YouTube. Day trading is exactly what it sounds like. You buy and sell stocks, crypto, or forex within the same day, sometimes within minutes or even seconds. The goal is to capture small price movements many times a day. Day traders usually sit in front of screens for hours, watching charts, indicators, order flow, and news. They rely heavily on technical analysis, fast decision-making, and strict risk management. One small mistake, one emotional trade, can wipe out the profits of an entire week. That's why day trading feels like a high-speed video game, intense, stressful, and mentally exhausting. Swing trading, on the other hand, is slower and more strategic. Swing traders hold positions for several days, weeks, or sometimes even a few months. Instead of chasing tiny moves, they aim to catch bigger swings in the market. They use a mix of technical analysis and basic fundamentals, like trends, support and resistance, earnings, or market sentiment. Swing trading doesn't require you to stare at charts all day. You can analyze the market in 1 or 2 hours, place your trades, and let them play out while you live your life. It's more like chess than a video game. Now let's talk about the real question. Which one makes more money? On paper, day trading has unlimited potential. If you're extremely skilled, disciplined, well-capitalized, and emotionally strong, you can compound profits very fast. Some professional day traders make more in a single day than most people make in a month. But this is the exception, not the rule. Studies consistently show that over 90% of day traders lose money in the long run. The reason is simple. Transaction fees, overtrading, emotional mistakes, and unrealistic expectations slowly eat away at their capital. Swing trading has lower flashy potential, but higher long-term survival. Because you trade less frequently, you pay fewer fees, make fewer emotional decisions, and have more time to think. Swing trading usually focuses on risk-reward ratios, like risking $1 to make $3 or $4. This means you don't need to win every trade to be profitable. Even with a 40 to 50% win rate, a disciplined swing trader can grow an account steadily over time. It's boring compared to day trading, but boring is exactly what makes it powerful. The biggest difference between the two is not money, it's psychology. Day trading demands extreme emotional control. You will face rapid losses, sudden wins, fear, greed, and pressure every single day. Most beginners can't handle this and end up revenge trading, breaking rules, and blowing accounts. Swing trading gives your mind space. You're not reacting every minute. You're planning, waiting, and executing with patience. For most normal people with jobs, studies, or businesses, swing trading fits real life much better. So which one actually makes more money? The honest answer is this. Day trading can make more money faster, but swing trading makes more people consistently profitable. If your goal is to build a long-term income, protect your capital, and grow steadily, swing trading wins for 90% of people. If your goal is high risk, high reward, full-time trading with extreme discipline and years of practice, day trading has higher upside, but also a much higher chance of failure. Let's talk about capital, because this is where most people get the reality shock. Day trading usually requires more money to start if you want to do it properly. In the U.S. stock market, there is even a rule called the pattern day trader rule, which requires at least $25,000 in your account to day trade freely. Even in crypto or forex, where rules are more flexible, you still need decent capital to survive drawdowns and make meaningful profits. Making a living from day trading with a small account is extremely difficult because small accounts can't absorb losses and traders end up taking oversized risks just to feel progress. Swing trading is much more friendly for small accounts. You can start with a few $100 or a few $1,000 and still apply solid strategies. Because you're targeting bigger price moves, you don't need to trade every day. You can analyze markets in nights or weekends, place your trades, set stop losses and targets, and let the market do the work. This makes swing trading ideal for people who want trading as a side income, not a stressful lifestyle. Also, risk management plays a huge role in long-term profits. Day traders take many trades, which increases the chance of mistakes, Even with a good strategy, one bad emotional day can destroy weeks of progress. Swing traders take fewer trades, but usually with better planning and clearer setups. Because the trades last longer, there is more room for the market to move in your favor. This doesn't mean swing trading is risk-free, but the pace naturally forces more discipline and less impulsive behavior. Now let's talk about lifestyle, which nobody talks about but matters the most. Day trading is mentally exhausting. Constant screen time, stress, rapid decision-making, and emotional swings can lead to burnout very quickly. Most day traders quit not because they are bad, but because they simply can't handle the pressure every day. Swing trading offers a healthier balance. You can trade, work on other projects, go to the gym, spend time with family, and still grow your account. In the long run, a strategy that doesn't destroy your mental health is far more profitable than one that looks exciting. So when you really zoom out, the answer becomes very clear. Day trading is like sprinting, fast, intense, and risky. Swing trading is like marathon running, slow, steady, and sustainable. Yes, a few elite day traders make huge money, but the majority fail. Meanwhile, a disciplined swing trader with average skills but strong patience can quietly outperform most traders over years. The real secret is not choosing the best strategy, but choosing the one you can follow consistently without breaking rules, losing sleep, or blowing your account.
Now let's address the biggest myth in trading, that more trades mean more money. This is one of the main reasons beginners are attracted to day trading. They think if they take 10 or 20 trades a day, they will make profits faster. In reality, more trades usually mean more mistakes, more fees, and more emotional decisions. Every time you enter a trade, you're paying a cost, either in commissions, spreads, or slippage. Day traders pay this cost dozens of times a day, which slowly drains their edge. Swing traders, by trading less, protect their edge and let the probability work over time. Another critical factor is learning curve. Day trading has a very steep learning curve. You need to understand technical analysis deeply, master multiple strategies, read market structure, control emotions, and execute perfectly under pressure. Most people underestimate how hard this really is. They jump in after watching a few YouTube videos and blow their accounts within weeks. Swing trading is easier to learn because it gives you time. You can analyze charts calmly, review past trades, improve your strategy, and grow step by step. This makes swing trading much more suitable for beginners and intermediate traders. Let's also talk about consistency, because this is what separates gamblers from real traders. Consistency doesn't come from big wins. It comes from small, repeatable processes. Swing traders often follow simple systems. Trade the trend, buy near support, sell near resistance, risk a small percentage per trade, and let winners run. Over hundreds of trades, this approach creates a stable equity curve. Day traders often experience extreme swings in their account balance, big up days followed by devastating losses. This emotional roller coaster makes it very hard to stay disciplined long term. There's also the question of market conditions. Day trading works best in highly volatile markets with strong intraday movement. On slow or choppy days, day traders struggle to find good setups and often force trades out of boredom. Swing trading adapts better to different market environments. Whether the market is trending, ranging, or correcting, there are always swing opportunities across different stocks, sectors, or assets. This flexibility gives swing traders more consistent chances to profit throughout the year. Finally, let's talk about the ultimate goal, financial freedom. Most people don't want to sit in front of screens all day for the rest of their lives. They want income that gives them time, peace, and control over their life. From that perspective, swing trading aligns much better with real financial freedom. You build systems, you manage risk, and you let time and compounding do the heavy work. Day trading can feel like freedom at first, but for many it becomes another stressful job with even more uncertainty. So when you strip away the hype, the screenshots, and the fake gurus, the conclusion is simple. Day trading looks more profitable, but swing trading is more realistic. Day trading rewards speed and aggression, but punishes mistakes brutally. Swing trading rewards patience, discipline, and long-term thinking. And in the real world, the trader who survives longest usually ends up making the most money. At the end of the day, the real difference between day trading and swing trading comes down to one word: sustainability. Anyone can make money for a few days or even a few weeks. The real challenge is staying profitable for years. This is where most traders fail, especially in day trading. The constant pressure to perform every single day creates stress, fear of missing out, and overconfidence
exuberance after wins. Over time, these emotions slowly destroy discipline, and without discipline, no strategy works. Another important thing most people ignore is skill versus luck. In day trading, short-term price movements are heavily influenced by noise, algorithms, and random volatility. This means even perfect analysis can fail within seconds. Many day traders confuse lucky streaks with real skill, and when the market changes, they give back all their profits. Swing trading filters out a lot of this noise. By focusing on higher time frames, you're aligning more with real trends, real investor behavior, and real market structure. This makes results more dependent on skill and less on pure randomness. Let's also be honest about income expectations. Beginners often think trading will replace their job in a few months. This mindset is extremely dangerous. Day trading especially creates unrealistic expectations because of social media. In reality, professional traders treat this like a business. They focus on protecting capital first, profits second. Swing trading supports this mindset better because it naturally slows you down and forces you to think in probabilities, not emotions. So if the question is, which makes more money? The mature answer is the one you can do consistently without self-destructing. For most people, that's swing trading. It allows you to grow slowly, learn properly, manage risk, and build real skill over time. Day trading is not impossible, but it's closer to professional sports than a normal job. Very few make it to the top, and most burn out before they ever see real success. In the end, the market doesn't care about your goals, your dreams, or your bills. It only rewards discipline, patience, and risk management. Whether you choose day trading or swing trading, the style itself won't make you rich. Your behavior will. And the trader who controls their emotions, protects their capital, and stays in the game the longest is the one who truly makes the most money.
Now, here's the final perspective that ties everything together. Trading is not about finding the fastest way to get rich. It's about finding the slowest way to not lose. Most people enter the market obsessed with profits, but professionals enter obsessed with survival. If you can survive long enough, profits become a natural byproduct of experience, data, and discipline. This is exactly why swing trading dominates when you look at real long-term results instead of short-term hype. Day trading attracts people because it promises instant feedback. You place a trade, and within minutes, you know if you were right or wrong. This feels productive, exciting, and addictive, but this same speed is also what makes it dangerous. Fast decisions amplify emotional mistakes. Fear makes you exit early. Greed makes you overtrade, and revenge makes you break every rule you promised to follow. Over time, these behaviors turn trading into gambling, even if the strategy itself is solid. Swing trading, in contrast, trains a completely different mindset. It forces you to think in probabilities, not predictions. You're not trying to be right on every trade. You're trying to manage risk across many trades. You accept losses as part of the process and focus on letting winners grow bigger than losers. This mindset is exactly how hedge funds, institutional investors, and professional traders actually operate. They don't chase every move. They wait for high-quality opportunities and deploy capital with patience. Another underrated advantage of swing trading is scalability. As your account grows, it becomes harder to day trade large size without affecting the market or your own psychology. But swing trading scales beautifully. Whether you're trading with $1,000 or $100,000, the same principles apply. Trend, structure, risk, and patience. This makes swing trading not just a beginner-friendly strategy, but also a professional-level approach that works at every stage. So the final answer is simple and brutally honest. Day trading can make more money in theory. Swing trading makes more money in reality. One is optimized for speed and excitement. The other is optimized for consistency and survival. And in a game where most people lose, the trader who survives the longest, compounds steadily, and stays emotionally neutral will almost always end up with more money than the trader who chases fast wins and burns out. Before we wrap up, let's talk about one last crucial factor that separates successful traders from the rest: your personal fit. The truth is, no strategy is universally better. Day trading is not inherently superior, and swing trading is not inherently safer. It all comes down to your personality, lifestyle, and goals. If you thrive under pressure, can make split-second decisions without panicking, and have the mental stamina to stare at screens for hours, day trading might actually suit you. But if you prefer planning, patience, and a slower, calculated approach, swing trading will likely make you more money over time because you'll stick to it consistently. The other point is adaptability. Markets change constantly. Volatility spikes, trends reverse,
commerce, and news events create unpredictable movements. A day trader must react instantly to everything, while a swing trader has the advantage of time to reassess and adjust. This doesn't mean swing trading is risk-free, but it provides breathing room, a critical factor for long-term success. Being able to adapt without emotional stress is a skill that compounds over years, and it's often what separates profitable swing traders from those who quit early. Finally, let's touch on lifestyle freedom, which is often underestimated. Many people enter trading thinking it will give them more free time, but day trading often does the opposite. The pressure to monitor charts, execute trades, and keep up with news can feel like a second full-time job. Swing trading, however, gives you flexibility. You can analyze setups once or twice a day, set alerts, and let trades run. This allows you to focus on personal growth, other income streams, or simply enjoy your life while your capital works quietly in the market. So the bottom line is, if your goal is short-term adrenaline and the possibility of very high, fast profits, day trading is your style. But if your goal is realistic, long-term profitability, lower stress, and a strategy you can actually follow consistently, swing trading wins hands down. The market rewards patience more than speed. It rewards discipline more than excitement. And ultimately, the trader who survives, learns, and compounds over years will make more money than the trader who chases instant gains every single time. The choice is yours: sprint or marathon, excitement or consistency, high risk or steady growth. But remember, in trading, slow and steady doesn't just win the race, it wins the entire market.